Welcome back to the Reinsurance podcast at TMPAA. I'm joined with Rick Farmer, VP of Programs at Berkshire Hathaway Guard. Welcome, sir.
Jared, pleasure. Thank you so much for having me.
Thanks for coming on the podcast. We've sort of been bumping into each other around the event so far, so I'm glad I sort of pinned you down to have this conversation.
Hey, listen, absolutely my pleasure.
But you're super busy. How are you finding the conference so far?
You know, target markets is, in the world of programs administrators, I mean, this is the place to be.
Yeah.
This is, I'd say that today more than ever, the breadth and the volume of MGAs and MGUs doing interesting things in this business, innovating outside the box, becoming more niche focused, increasing their relevance in the distribution channel. It's never been greater, probably than it is today. So to have the opportunity to come here and meet with 50 of them in one spot in one hotel over the course of 2.5 days. This is about as well as I can spend my time.
Well, and I think you've captured something that sort of emulates what this theme, the vibe of this conference is the sort of innovation and excitement that you have here. What are the things that as Guard sort of looks around the opportunities that it see here, what are the things that really intrigue or pull you in or capture your interest?
You know, I think if I could really distill it down to one thing, for me this is kind of cliche in this industry, in this room, but who's created a better mousetrap? And I don't mean that as much from a distribution sense and from a sales sense as I do from an underwriting standpoint. I think that we've really seen a migration of talent in this business from a true underwriting expertise standpoint into these MGUs, into these distribution channels. And we're seeing underwriters and underwriting philosophy and underwriting acumen and usage of data being applied at these MGUs. That is something that from our standpoint is worth tapping into, something that's almost impossible for us to recreate on our own. We think ourselves great underwriters, and I think we are a great underwriting organization, but sometimes you have to have the humility to admit that there's someone who's really doing something well, doing something special, and that's worth investing in, that's worth backing in, and that's worth entrusting them really to spend our capital and put it out there in the market in a responsible way that can drive a return that is above what maybe we could do on our own.
Well, it's a fascinating point, because when you think about the traditional value chain, it can be quite a lot of work for a traditional carrier to sort of spin up a new product and take that product to market. And as you sort of highlighted, this sort of focus on a niche, if you're trying to go after a specific niche, it can be quite cost intensive for a business as large as Guard. But like that MGA could just go straight at that and put all their energy in a really efficient sort of distribution channel. And it allows us to access some of these new categories of risk in ways that may have otherwise been too difficult to write in a cost-effective way. And it makes it an interesting one for you guys to look at sectors you might be wanting to get into, or opportunities to go into somewhere new that you hadn't necessarily had on the sort of plans if you looked at the traditional book that you guys write.
There's no question. I mean, I think that, I heard the word thrown around this week, nimble was a word, regarding an MGU. They can move a little quicker, I think, than sometimes a carrier that, there's a lot of mechanics to move at a carrier to stand up a new product or enter a new space, as you said, and frankly to audit the distributors of that product to make sure that they're delivering the most credible submission quality over and over and consistently, time and time again, or even when we have to narrow that distribution network to make sure we're focusing on just the right group of people to reduce the clutter, to reduce the noise. These MGUs have established brands, established personalities, established relationships in these very niche areas, and the retailers and wholesalers who then ultimately produce this business in the channel. And some of them have that established so well, so thoughtfully already, that being able to invest in those sorts of partners, really, I think the ROI on some of that business is you can't really replicate it on our own. Even if, even if we invested for a decade.
Yeah. Well, you mentioned there the value of submission quality and things. When you, as one of the sort of preeminent partners for MGAs and MGUs, how do you guys think about the role data has played in sort of that you're expecting to receive, and how do you evaluate your various partners on the quality of data that they're sending upstream to yourselves, and then how, because you write on balance sheet mostly, or mostly in net, right? So it's the quality of data that you get to assess a portfolio is incredibly important.
I mean, I'd say it's the starting flag, really, to our evaluation of any MGU, right, is the first real green flag is what is the quality of data that you can provide to us. The quality of data we're getting from these MGUs, from these partners, a lot of times is maybe not entirely indicative of the ultimate quality of the partner, but in a way it does show us a little bit about how are they, in terms of the curve of the business, about being able to collect and then ultimately hold their distribution partners accountable, but how are they able to hold themselves accountable to the evolution of their own portfolio, and how are they managing it? So when we can ingest a really thoughtful data set from a partner, not only does it help us get comfortable with who we're investing in terms of the actual performance of that business and the underlying portfolio that we're looking at, but really it's a forward-looking, it's kind of a forward-looking view of what does our relationship with this partner look like, in the future, in terms of our quarterly evaluations of the business and the KPIs around it. So it's been interesting to see. We are certainly, and this is going to be no surprise to anybody, least alone you, that we're really in a huge moment of time and a huge shift in terms of what carriers are expecting in terms of data. I think the property landscape in particular, I think our expectations around data quality are a lot higher. Data on property is a little bit traditionally, the data points are a little stricter. When you're starting to talk about some of these more nuanced liability lines of business, I think those are starting to catch up. And the demands on the average quality of that data are starting to increase and catch up to where they are in the property space.
Well, I love that phrase you used, the sort of starting line of what the expectation is. And I think over the last couple of years, a lot of people looked at, high quality data and really clean structured data and all these things as kind of a nice to have. It would be good if, but I think you're pointing out this is the shift, this awareness that this isn't we would appreciate it if you did this. This is a prerequisite for this conversation, this relationship to start, right? And this is the way MGAs are going to have to go into the market.
Yeah, I think if you were to look at our marketing collateral, shout out to our own marketing team for pulling it together, but we list out pretty clearly that if we want to seriously consider a new MGA, MGU submission, a complete data set for us to be able to evaluate the quality of the underlying portfolio is an absolute must. Day one, where we simply, we could ingest 100 MG new submissions, in a half a year. We have to prioritize those by who can really provide us with, a complete data set. And that's absolutely critical to our evaluation of any new partnership.
Well, and if those data sets have this consistency and structure to them, it also allows your team to build out processes to make that work faster, right? The one of the biggest values of the MGA partners you have is the efficiency by which they're able to, access risk, and you can work with them. So if it's consistent and structured, it makes it easier for your team to do the work internally, thus further emphasizing the value that you see in those key partners.
I mean, it's costly. From our end to fix bad data. It's extremely costly. So certainly the easier it is to ingest data, and frankly, we probably aren't alone. I know we're not alone from the carrier standpoint, and again, having requirements that just meet our schema to even partner with Guard, on an ongoing basis. But ultimately, really, we want to be spending our time as a carrier looking at the insights we can drive from that data, not spending it actually manipulating the data itself.
Well, and there's this element you're drawing out there, this sort of partnership component where it's not just you give them the capacity, but it's you helping those businesses evolve how they're pricing positions, how they're positioning products, how it's very much a partnership model, and the data helps make it where you can deliver more value back to them as well than just being capacity.
No, absolutely. I mean, I think a really good carrier partner is, ultimately, I think a healthy dialogue between an MGU and a carrier, a truly healthy marriage dialogue, is when you go into a meeting, we have our view of the business, they have their view of the business. We should be trying to overlay those, determine where do we absolutely align and agree, both on what's working and what's not working, but maybe where do we have differences of opinion on the book.
Yeah.
And so I think that's a very healthy back and forth. So then the question to our partner is, hey, we think we've uncovered something, and I think we've gotten ahead of a leading KPI that we don't, maybe neither side knows exactly what it means today and where that's going to lead, but it's something for us to actually pay attention to. It's something for us to put on our mutual radar, to really investigate, and that's where then the human component of who we're investing in from an MGU standpoint and the expertise and that niche expertise really comes into play, is really helping us turn over those stones and uncover the meaning in some of these these data trends that we're ultimately observing in the book.
Do you think that a greater sort of data quality from the MGU or MGA partners would help unlock more capacity from you guys as you sort of evaluate where you're going to put the big bets behind various MGAs around the market?
It certainly makes it an easier conversation with my CUO and with my CFO when I'm trying to sell them on, hey, I love this new program. And I mean, so I would say that absolutely. I'd say that, again, even if the news is bad, if we feel like we really know the true story and the truth, we can generally operate in that, knowing that we're operating from a common truth. So at the end of the day, whether it's from data, whether it's just the overall how is a relationship progressing, transparency is what unlocks capacity, I think, more than anything. And to that extent, I do think data certainly plays a role, and a leading role in being transparent and being just honest about the business, good, bad, or indifferent, and then aligning on whatever change is needed in order to maximize the value of that partnership.
This has been sort of such a clear distillation of how a really powerful relationship between a capacity partner and MGUs and MGAs will work to its sort of greatest extent. But I know you guys also have a big primary book. How do you think about the proportion relationship between your primary book, what you want to do and grow there? What sort of ratio goes into the MGA book? How do you see that evolving? Does that share of pie is it growing, or you sort of see it remaining both growing but remaining that proportion the same?
Listen, I think at the end of the day, it's our job to pursue the best business where we can source it from, right? We strongly value our traditional agency relationships, our direct product that we are in the middle of really transforming into something we believe is going to be highly competitive in the small commercial space. A lot of work, a lot of effort going into the transformation of our commercial package product, of our workers' compensation, of our commercial auto products. But the program space, I would say, certainly has a renewed sense of focus within the organization. So one of the things that I don't think we ever want to get trapped in is saying we need to hit X percentage of we need to be exactly this percentage of a company, because then you box yourself in. You might miss an opportunity in one place, and we might reach the point where it's the program space that's driving more opportunity than we expect. I think we're very bullish on it, and we're investing heavily in our programs team right now to make this a significantly larger part of our business. But we would also I'd love to look at you, come back and talk to you in a year, 2 years, and both have thrived and both have grown, and the percentages have fluctuated X, Y, but at the end of the day, it's our job to pursue the right opportunities at adequate price, right? And be able to drive a fair return, for our investors. And I say fair because obviously, it's not about just making them, squeezing every dollar. It's about, finding partners and finding distribution sources and insureds who can ultimately drive a very fair outcome for the risk taking that we're doing at Berkshire Hathaway,
Yeah.
at Guard, and I think that that's probably reasonable.
Yeah. Well, and I think you're right to be bullish, right? If we just use this event as a sort of an indicator, this event has accelerated in its growth over the last couple of years, and so that serves to strongly show that the MGA space is alive and well and thriving. It's being supported by a massive technology solution space. There's more and more interest from yourselves and other carriers. There's more interest from the reinsurers to back in and support it as well. So I think bullish is very justified.
No, I think that this is, listen, I will speak personally on this. I'm thrilled.
Yeah.
To have the opportunity to lead Guard's programs team and have the backing of Berkshire Hathaway, to be able to make some strategic investments in partners who are revolutionizing this business and who are thought leaders, who are underwriting leaders in this business.
Yeah.
I think that there's enough humility within the leadership of our organization, again, that partnering is sometimes just as, if not more effective a way to pursue some of this business than trying to do it ourselves. And again, I can't say enough about the obviously the hospitality, the coordination of target markets. We're thrilled to be a part of it. And again, the influx of talent into this space and the increased relevance and accountability of the MGUs that make up this space make this an increasingly attractive place for us to invest.
Yeah, and there's a lot of excitement, and that energy is quite palpable at the event. What is the sort of the thing that's getting you most interested and excited as you walk around the different meeting rooms and the sort of conference area? Is there anything that's sort of jumping out to you that's getting you really excited about where the industry is going to go and what's going to be happening here?
Yeah, I mean, I'd say the diversity of the folks who have entered this space. I would say the diversity of opportunities that exist, that and the niche focus that some of these MGUs and MGAs and owners of MGUs and MGAs are pursuing. To really attack very, very specific verticals and service the needs of that vertical, and not just, hey, we know how to insure it, but we know how to distribute to them. We know how to communicate with them. We know how to interact with the actual consumers of this insurance, all the way through the ecosystem, from carrier down to fireworks wholesaler, right? In that space, for example, and that you have true experts who have that empathy all the way through the food chain, and you hear the way people talk about the industries in which they operate, you really feel that they are a part of that value chain through that entire industry. And so in a way, when you walk through a place like this, you get a little slice of the entire American economy, right? Coming right to your doorstep. And I'm constantly inspired by, how much I learn, even in just sitting through these events and getting to meet with these diverse stakeholders. And I think that the humility that comes with seeing that expertise elsewhere, and is really inspiring. That the insurance industry, I think in general, and especially the MGU space, is really responding to the American economy and the bespoke needs of each of the different industries within it.
Well, and I think it's a really interesting position that you are in your role, where you'll see a new business come to you and you begin to learn about why a sector is the way that sector is, and what are the little underlying things that they know that will drive performance and improve loss ratios that, from the outside you may have been totally oblivious to. It's like consulting in some ways. You're like, I never knew that this entire industry had this sort of nuance and operates with this thing that attaches to it. So it creates a really interesting role that you have to sort of double click onto all manner of different interesting sectors that do give you a really interesting cross section of the economy.
No, and I mean, I think that what's even more valuable is you see a lot of investment from now. I think that the alignment on driving profitability between the MGUs and the carriers, that alignment has gotten closer than ever. But I think that what's interesting about it is that you're starting to see, at least I'm starting to see, a real interest in bending the trends and some of the loss trends in these industries, and how can we actually not just control the profitability by restricting coverage or raising deductibles, but how do we actually help the insureds themselves change behavior to be more sustainable in their own business? How can we use risk management techniques to actually help them run their businesses more smoothly, more predictably, avoid losses? Because let's be real, an insurance event, yes, it can indemnify, but it can't really put back that time. It can't really rebuild reputations from large failures or large disruptions. So, because at the end of the day, insurance is an interesting product, right? Just on what else do you buy in the world where the best case scenario is you never use it?
Exactly.
What else do you ever buy where that's where that's what it is? But that's what insurance is an insured is happy if they don't use their insurance too. So the more we can continue to change insured behavior, support insureds in their investment in risk management, the more I think we add value not only just to this micro insurance ecosystem, but we kind of give back and we help consult in a way in our area of expertise to those industries and those segments throughout the American economy.
When you add to that this improved efficiency of accessing the capital itself, such that the price becomes more economical to buy, right? So if we improve that whole distribution chain on top of everything else you've said, it makes the product more viable and more affordable and gives you all the promises that we've always established. So it makes a really interesting and exciting sort of solution space for regular people, for businesses and lives and stuff. So it's super, super important and underlies what we're required to do as an economy.
No, listen, I love this industry. I think that too often you can be seen as a villain, but I think that really at the end of the day, insurance companies, we don't want insureds to have losses. We want insureds to thrive. We want them to grow. Our interests are truly aligned with that. And I think the MGU really actually augments the insured's position to affect change at that very localized segment level, better than we've been ever really been able to do in the past.
No, completely agree. Well, Rick, thank you for spending so much time with me on the Reinsurance podcast.
Absolutely, no, it was a pleasure.
Absolute pleasure. And then, looking forward to the rest of the conference with you.
Yeah, thank you so much. You too.